get this knowledge. This is your new college. Building up that wealth, that's the financial promise.
This is the Simple News Network. Here is the latest on global markets.
Hello everyone and welcome back to Explain Simply. Today we're going to talk about something that secretly controls the entire global economy. Wars, the Federal Reserve, and the bond market. When these three things collide, trillions of dollars can move across the world in hours. Stocks market can crash, currencies can shift, and economies can slow down. But the good news is, the idea behind all of this is actually very simple. Let's start with the basics. Governments spend huge amounts of money every year. They pay for roads, healthcare, schools, and sometimes even wars. But governments don't always have enough money to pay for everything. So what do? They borrow money. They borrow money by selling something called bonds. A bond is basically a loan. When you buy a bond, you're lending money to the government. In return, the government promises to pay you interest every year. And after a certain amount of time, they give you original money back. For example, if you lend the government $1,000, they might pay you $40 every year as interest. After 10 years, they return you $1,000. This is called a 10-year government bond. Now imagine millions of investors around the world buying and selling these bonds every day. Banks, pension funds, hedge funds, and governments. Together they create something called the bond market. And this is actually the largest financial market in the world. One very important number investors watch is the 10-year Treasury yield. This number tells us how much interest investors are earning for lending money to the government. When this number goes up, borrowing money becomes more expensive across the entire economy. Mortgage becomes more expensive, business loans become more expensive, even credit cards can become more expensive. So this one number affects almost everyone. But there's one institution that has enormous power over this system, the Federal Reserve. The Federal Reserve, often called the Feds, is the central bank of the United States. Think of the Fed as the controller of the cost of money. If the economy is slowing down, the Fed can lower interest rates. When interest rates fall, borrowing money becomes cheaper. People buy more houses. Business expand. And stock market often go higher. But if inflation starts rising too fast, the Fed may raise interest rates. Now borrowing becomes more expensive, spending slows down, and markets can become unstable. Sometimes the Fed takes even bigger action. It can buy huge amounts of government bonds. This is called quantitative easing, also known as QE. When the Fed buys bonds, it pushes interest rates lower and injects more money into the economy. This helps markets recover during major crises. But the Fed can also do the opposite. It can stop buying bonds and slowly remove money from the system. This is called quantitative tightening, or QT. When this happens, interest rates can rise and markets can become more fragile. Now let's add another powerful force into the equation: war. Imagine a major conflict involving a country like Iran. Wars create uncertainty. Oil prices may rise, trade routes can become dangerous, governments spend more money on defense, investors become nervous. Normally, during times of fear, investors rush into safe assets like government bonds. But sometimes something unusual happens. If large investors or hedge funds are forced to sell bonds quickly, bond yields can suddenly jump. And when bond yields rise rapidly, borrowing becomes more expensive everywhere. Businesses slow down, consumers spend less, and stock market can fall. At the same time, investors start asking themselves a simple question: why take risks in stocks when they can earn safe interest from government bonds? So money begins flowing out of stocks and into bonds, and this is why stock markets can drop when bond yields rise quickly. So when we zoom out and look at the big picture, the global economy is shaped by three powerful forces. Wars create uncertainty, the Federal Reserve controls the cost of money, and the bond market decides how expensive borrowing becomes for the entire world. When these forces collide, trillions of dollars can move overnight. And that's how wars, the Feds, and bonds quietly shape the global economy. Explained simply. If you enjoyed this video, make sure to subscribe for more global events. Take it easy.
Sick of being broke and stuck right on the block. It's finance o'clock, gotta think outside the box. We studying these stocks, came from the school of hard knocks. So let's get this knowledge, this is your new college. Building up that wealth, that's the financial promise. Let's get this knowledge, this is your new college. Breaking out the struggle, yeah, come and join the college.